it's no longer news that local investors are really out of the equity market in Nigeria. The market is dominated 70% by foreign investors, and a big chunk of that part of the investors that are not in the market right now, obviously, are the pension fund administrators that are managing 2 trillion in assets. As Afrinvest, like you mentioned, has released a report, and joining me to discuss that report as to why PFAs should be returning to equities is Victor Ndukauba. Thanks a lot, Victor, for joining us on the show today. Well, first of all, it's probably no longer news that this is a good time to buy equities, but can you just highlight for us why you think this is probably the best time? Because obviously with the reforms in the banking sector probably coming to an end now, this looks like a good time to start allocating to equities.
Yeah, thank you, Wole. For us, typically we have watched the consistent decline in the market, particularly over the last 2 months, or rather beginning in July, with some sense of helplessness, as it were, trying to understand why there has been a significant loss of confidence as in those particular 2 months. We noticed also that there was this marked decline in trading activity, measured by liquidity. Clearly, in the first quarter of this year, trading liquidity averaged 3.4 billion on a daily basis. It fell slightly to 2.7 in second quarter, but right now it's sub 2 billion. And we feel perhaps looking then again at valuations, where for example the market was trading at 16 and a half times early this year, is now down to 12 times on a PE basis, and price to book from almost 3 times to about 2 times now.
And it's probably even a better picture if you look at the banking sector.
And then by the time you further drill down to banks, for example, who on account of all the should I say uncertainty surrounding the rescue banks, were even trading lower at lower multiples. We feel that there is no better time than to return to equities than now, especially on the basis of all what's going on this week, particularly the EGMs and the resolution of the remaining 5 rescued banks.
And obviously, it's really a case of if the PFAs come to the table and bring that liquidity that we know that they can, it might be, should I say, that it might just be the kicker that the market needs to have a sustainable rally, because as you've mentioned very clearly, the valuations are very, very, very appealing at the moment.
Yes, indeed. For us, one of the things we did was to just try to trend, January to date, to understand what have been the key market reactions to significant news on the macro front, or what the key market drivers have been. And to date, we haven't seen any major boosters, as it were. And we felt, looking at valuations where they are, understanding that pension fund administrators sit on a significant pool of assets, a sizable chunk of which is in equities. They hold the capacity to drive this market up if they were to make available, just by slightly adjusting the proportion of their AUMs that is currently invested in equities slightly up, just effectively taking it back from 14.9% based on our estimates for where it is as of September to the 17.6% that it was as of December.
And that might be
that
something
is
that
potentially going to release about 56 or roughly 57 billion naira, which can then ultimately create some kind of sustained rally on the board.
But this development obviously brings to light that whole, should I say, sentiment that we've seen in Nigeria, where there's that herd mentality where investors tend to go with the trend. This market is coming down, people back off, and really not looking at valuations at all.
Yes, I think one of the interesting things, for us is the fact that we recognize that a sizable amount of liquidity or trading activity, measured by liquidity, is driven by foreign investors. By some estimates, anywhere between 60 and 70%. In some cases, more, depending on the trading day. And we feel, if you're to drilling down further down, understanding, for example, what global equity trade flows look like, we realize that Africa receives anywhere about 5% of that pot, and we know that a lot of that is retained in South Africa. So anywhere between 20-30% of that, of the 5%, is what actually does come into trading Nigerian bonds. So we're looking at a scenario where foreigners, on account of a 1 to 1.5% marginal cash injection, have been the guys driving this market by trading activity. Clearly, it then becomes logical that if the PFAs, who are largely invested in Nigeria equities, whose assets are, or whose investment horizon should really be the long term, it's imperative that they do not typically follow the trend of what the foreign investors are doing in terms of investment flows and decision making.
Well, a key question for me is, what if the PFAs don't hit this call, if you like? You're obviously asking them to come to the table, buy equities, and get the market going again. And obviously, there's a compelling case for that.
Yeah.
But like I mentioned earlier, this market, there's a sense that it might be getting to the bottom.
Yeah.
But if the PFAs don't come to the table, who is going to come to the table? Who is going to sustain the market level as it is?
That is more reason why we feel it's compelling for them to do that. I think in answering that question, I would rather say why they need to as against if they don't. The reasons being, as it were, just using the pot, they had 3.358, roughly 359 billion invested in equities as at year end. If the market has fallen, 18+% this year to date, that pot could have shrunk to 290 billion. Obviously, their portfolios will be looking red. And that is on account of the sell-off, which has largely been driven by foreign investors. I think it's imperative for them to realize that it is within their capacity to reverse that trend by simply buying up more equities and perhaps taking the investment levels back to year-end levels for 2010. And the case is compelling, really, because as they begin to buy up equities based on very attractive valuations where banks are trading at single-digit price to earnings multiples for current year earnings or on trailing basis. And even is that those ratios go from about 8.8 times on trailing earnings down to about 6 if you're looking forward. So what that tells me is it's extremely compelling for them to begin to purchase. Where they begin to buy, we'll begin to see some momentum build up, because you will find other investors who have also stayed on the sidelines waiting for some catalyst will begin to come back.
I'm sure the whole market is hoping that they will heed your call. Well, one last point. What about speculation? Is this, like I was trying to make a point about the foreign investors. Maybe they will be the ones to start coming back into this market. Yes, of course, there are global headwinds right now, but it gets to a point where the valuations are just too compelling. Like you mentioned, the banking sector is I think on average much lower than one-time book right
it's
now.
about 0.9 times.
So there might just be a kicker from the foreigners. What do you think?
Well, yes, indeed. Based on fundamental valuation, the market obviously does present opportunities for buying, and we think, recognizing that indeed there are challenges across the globe or global investment community, that Nigeria as a frontier market does continue to present opportunities, which at a certain point in time it becomes a no-brainer basically, for certain people to come back into equities.